Hello and welcome to today's presentation where we have the CEO of Flexion Mobile presenting. We have Jens Lauritzson with us, and Jens, please go ahead with your presentation.
Thank you so much, and welcome to our Q4 earnings call and market update. I'm going to say good morning because I am in San Francisco and it's very early morning, so you'll have to do without the camera today. We're here, the whole Flexion team, at the Game Developer Conference, one of the biggest events in our industry. And we're here to meet with existing and new partners. We have a whole week full of meetings where we're going to discuss trends in alternative distribution, new opportunities such as direct distribution, cloud gaming, and so on. And hopefully we'll make progress on some of the deals we're working on. But let me just dive into our Q4 update then. So we released a trading update a few weeks ago. So most of the financial results are already out in the market, and they're broadly line up with our results. So you know that we had a cracker of a quarter. Christmas is always good, but this year it was exceptionally good. We came in from a fairly slow Q2, Q3, and grew our revenues by 64% in Q4. So I'm very, very pleased with that. And we got close to the $30 million per quarter run rate, 24 million pounds. So very, very happy about the results. So what actually drove our strong performance in the quarter then? Well, we obviously Monopoly Go was a new title for us last year, and it started to really steam up, gain momentum in Q3. And as I reported in my last update, we could see strong performance early in Q4, October, and that continued right through the quarter. But it wasn't only the new titles, but also our evergreens, top tier titles such as World of Tanks and Evany that always perform well for us during the Q4, and they did this this year too. So that's really good news, of course. But I also want to mention our store partners. So we had some really strong promotions during the quarter. Store partners had lined up a lot of campaigns, and we actually managed to triple our traffic, our monthly active user base during the quarter compared with last year, which is quite amazing and just shows what type of distribution power we have nowadays. So that's really good. Going back to the top tier titles that we have in our portfolio, I think it's worth mentioning that they generate roughly $700,000, $740,000 on average per month now. So it's actually significant revenue for the developers. We also managed to start converting some of our pipeline. We signed 4 new titles during the quarter. And I'd like to zoom in on Klondike Adventures, which is a top grossing title from Visor. And there are a couple of reasons why I want to talk about them. Not only are they making $5 million or so in Google Play every month, but they're also a very good example of how we like to work with our developers. We start with one title, which we had done with Visor in the past, and then move over and expand the partnership to more of their games. And that's exactly what happened here. That, of course, will allow us to grow faster when we can expand with our existing partners, as long as they make good games, that is, of course. The other point I want to mention is the game was already live in Amazon and Huawei App Gallery, and the developer wanted us to take over that distribution. not only because they wanted to outsource the work, but of course, see higher profitability on that distribution, but also to expand their distribution with us, and by that also the revenue base from alternative distribution. So we call that store takeovers, and it's becoming a proven model for us, and quite successful. And what is interesting is that the stores are now also seeing the benefit of that. So they're actually proactively promoting Flexion as a outsourcing partner to some of the developers that are less engaged, where the games could perform better. And of course, that opens up doors to new top games, and is really good for us. I would also like to mention and spend a few minutes on Audiously. I've been very impressed with how they performed in 2023. I mean, 2023 was a very challenging year for the global advertising industry, and also for many of the influencer marketing agencies around the world. We saw quite a few go under during the year, but Audiously managed to steam on, and even though one of their biggest customers went into liquidation, they managed to grow their numbers overall during the year. I mentioned before the Seven vs. Wild project, which they won last year. That performed as we expected, very well in Q4, and of course generated strong growth during the quarter. The production company was so satisfied with the results that they have actually expanded and extended the agreement to 2024, which really sets us up for strong growth in 2024 too, because we will now be able to start selling sponsorship much earlier, and we are the exclusive agency for sales of sponsorship in the German-speaking markets. Just a quick for you who don't know what Seven vs. Wild is, it's the biggest YouTube show in the German-speaking markets, with about 100 million views per season. So it's massive, really. Generally, on our cash position or financial position, it's really healthy. We're generating strong positive cash flows every quarter now. In Q4, we generated around 3.5 million pounds in cash, which is of course great. And at the current point in time, we are now at 14.3 or so million in cash, whereas at the end of December it was around 11. So that's continuing, and of course it's because we're generating positive results and strong adjusted EBITDA. I think it's worth mentioning here that in Q4 we generated 5 million pounds in gross profit, out of which 2 million was adjusted EBITDA. So that is strong in any book, and I'm very happy about that, because we have no debt, so it means that we can now go after good opportunities and invest in them, whereas many other companies in our industry are serving debt and paying off interest. Looking ahead then at 2024, we, of course, as I mentioned, Monopoly Go has been good for us. It's really raised awareness among many of the top grossing game developers around the world. They're seeing us all of a sudden in a completely different light. Why are we not working with Flexion when these guys are? So that has really, of course, helped the inbound. We're now seeing strong inbound sales every quarter, and that means that we have a very strong pipeline. I also like to take the opportunity here to welcome our new partner, Big Fish Games, who's part of a bigger, fairly big games company, public group called Aristocrat. We have signed their game Evermerge, and hopefully we'll be able to expand over time as we've done with all our other developers. I also wanted to mention that already now we've had I think strategic meetings with pretty much all of our store partners. I was in Barcelona a couple of weeks ago where I met with many of the Chinese stores, and there is a sense of positive change all over the industry. I think there's a renewed confidence among developers and store partners, and I think a lot of that has to do with the Digital Markets Act in the European Union, but also regulatory changes and pressure all over the world, which are really making where we're making good progress, albeit a little bit slow, but that's to be expected when we're dealing with monopolies like Apple and Google, and they're going to do everything they can to protect their market. I'm sure you've read about Epic and Spotify, how they're fighting it out in courts, but it's really helping. We can see a change. DMA has now come into force, and we're expecting response from the European Commission on the proposals that the stores or the gatekeepers have come up with. So watch this space over the next few months. The the user acquisition market is still very challenging for for most developers, and that is really primarily impacting them in Google and Apple's stores. It's of course an opportunity for us to move our position forward. Developers are now looking at alternative distribution because they simply have to. Their user acquisition model isn't working anymore. Their margins are tight. One thing that we're discussing here with game developers at the conference in San Francisco is something called direct distribution. I think it's a very exciting opportunity, and I just want to spend a few minutes on that. We mentioned in the past our partnership with a company called Digital Turbine. They have specialized in building distribution channels outside of Google Play. So today they can distribute games and apps to about 800 million users around the world through their software, which is embedded on those devices. That in turn lets developers distribute directly and bypassing Google and hopefully at some point also Apple. And why is that interesting then? Well, there's many reasons. Google and Apple have really controlled developers and their marketing and what they can and can't do. So there's a sense of freedom in terms of how they market their games to their consumers. The other thing is, of course, they're really suffering because of the sort of Google and Apple tax, the 30% that they have to pay for every transaction. Isn't it a little bit strange that when you market another product on the web, you never have to pay 30% to anyone, but if it's a game or app, all of a sudden Google and Apple take 30% out of every transaction you generate. So that's an opportunity to change that, and how they can do that as a developer. You distribute a non-Google Play version to your users through Digital Turbine or AppLovin or Unity that also have similar type of distribution channels in place. And you, instead of having Google's payments integrated in your game, you'll have third-party payment service that generates 90% margin rather than 70, and that makes a big difference to a developer who can now use that increased margin to reinvest in marketing and to some extent mitigate the problems that they're seeing in the traditional user acquisition space. We are investing in this opportunity, but not only that one, but we're recruited a senior person to drive that initiative for us. Generally speaking, we're recruiting quite a few senior people, and we're sort of beefing up the organization to cope with the higher service levels that comes with serving bigger games and bigger customers. So that's a space. But we're also looking at things like cloud gaming. I think I mentioned in the past Samsung's initiative on instant play, where a customer can, instead of downloading 1 gigabyte of data to their phone, they can from their Samsung phone just click on an icon and start playing the game from the cloud. We're participating in that, and that's a super exciting project. But it's still early days, and we'll update you more on that later on. So beyond 2024, then, well, we have an ambitious plan. We're at the run rate of $90 million per year now. In the next 3 years, we intend to grow organically by 100%, and we are going to do that by improving our portfolio. We have our top tier games today, as I said, they generate about 700,000 on average. We have a portfolio of 30 games today, but it's only 10 of them that do about 700K per month. The opportunity is here clearly to replace some of the lower performing titles with stronger titles. And that's all we need to do, really. It sounds simple, but I think over time we'll manage to do that. And likewise on the influencer marketing side, we're aiming to address some of the customer concentration we have around some of the big clients, expand that customer base to more bigger clients together. In the short term, then, what I would also like to mention here that we have in the past guided on an annual basis. We've given you market guidance, revenue guidance every year. Now we're going to move to quarterly revenue guidance instead. We started at Q1 well. We have good momentum coming into 24. So our guidance for Q1 is somewhere in the region of $20 to $24 million. We are going to guide on dollars because that's our main sales currency, whereas the GBP is fluctuating and exposes us to FX, so it's more difficult to guide on that. Other topics, and I'm sure everyone's asking what's happening with the 2022 accounts. I can assure you that we have a very competent finance team and a strong audit committee that are fully focused on delivering 2022 and 23 accounts as soon as possible. We have a few outstanding items on 22 that we will submit to our auditors before Easter, and then hopefully sometime after that I'll be able to get back to you with an update on when they can wrap up 22, but I'll get back to you on that later on. So just to summarize then, we had a very, very strong all-time high Q4, which I'm pleased with. We have a strong momentum going into 2024. We have never had such a strong lineup in the past. DMA is in full force. We have a strong sales pipeline and a lot of strong trends in favor of our market. So I'm really looking forward to coming back, reporting our Q1 progress on the 21st of May. And well, with that, I would like to thank you for zooming in and checking us out, and watch this space. Thanks again.